Hi, today I'm just so excited to welcome Phil Carr from MC Solutions. Phil, thank you so much for joining us.
Absolute pleasure.
And I think to start off with, I think it's really important to just cover what's going on in the finance world and especially in real estate, buying houses, because that's where we're finding the main challenge at the moment with young buyers. So if you could give us an overall picture of what's happening, and over to you.
Absolutely. I guess in the current climate, what we're finding is we're spending a lot of time rearranging expectations. Clients in the past 12 months have been trying to enter the market. They've been engaging with banks and brokers to find out exactly what their borrowing capacity is. The problem that we're experiencing now is we're 12 months down the path. The expectation was set at a certain level and that has to be now refined. So a lot of time is being spent on that. The reality is we've come out of an environment where we've had cheap money. You know, 30 years ago, rates were 17%. 12 months ago, rates were 2.5%. Before that, rates were 1.99%. So we've come off the back of very cheap money, and the baseline has just had to be changed. So clients who are entering the market need to be coming and getting accurate data before they start looking at a house. There is a process that has to be followed. If we don't follow that process, the expectation, again, has to be realigned.
That's interesting you should say that. I was having a meeting with a client last night and he turned around and he said, when I bought it was 17%. And he said that actually was normal. So it is cheap money. And where do you see us, I know it's like a crystal ball, but where do you see it's going to balance out at the end of the day?
I don't know. My money was always on about a 5 and a 5.5% interest rate. The reality is that was prior to the Melbourne Cup interest rate rise. So we probably find that the variable rate at a guess will probably be about that 5.5 to almost 6%. But again, it's all,
you don't know, it's the crystal ball.
Absolutely.
Can I ask you to give us some sort of advice for first home buyers? We get, obviously our price range in this area has increased quite substantially. We don't see it actually dropping back too much. I think we're pretty much stable now, and we've leveled out. Where do you see, how can we help our first home buyers?
First home buyers are quite lucky. There's a couple of different schemes that are available through the government. So there's the First Home Buyers Deposit Scheme. Now the name changes every 6 months, so I'm going to call it the First Home Buyers Deposit Scheme. That is a fantastic incentive. Clients just require a 5% deposit plus stamp duties and legals fees. And that will get them a home up to the value of $750,000 through that particular scheme. First home buyers are also able to utilise guarantees, so family guarantees, the family guarantee will allow them to leverage off the equity from mum and dad's house as their 20% deposit.
As we've done.
Absolutely.
And that was actually really quite seamless, wasn't it? It was a situation where we needed to come in and help, and we've done that. What's the risk on that side of it?
If any. Yeah, I've been working with mortgages now since 2008. I've never had any risk present itself, but the reality is if you do have a family member who offers their house as security, there is a certain level of risk that comes off the back of that. So let's say, for example, the applicants couldn't meet their financial obligations. They can't meet their overall 100% of their loan. The bank would come through, potentially sell off that house, and then there is a risk for mum and dad to either pay out the loan or sell their house to clear that debt. The reality is, though, the applicants would never do that. They would rent out a room to a friend. They would turn around and rent the whole house out. They'd find a workaround for it.
Find a way. Yeah, absolutely.
Well, another thing that's currently really rearing its head, it's happened over the last 2 years, is the short-term funders. So you've got access to money, okay? Zip Pay, Afterpay, Hum, Honey, whatever those types of lenders are. When money was cheap, having access to this essentially meant that you could buy whatever you wanted to. With rates increasing, you've now got that obligation. The cost of groceries has increased, the cost of fuel's increased, the cost of electricity has increased. Okay, you add into that all this very cheap money that you also had is another expense. So as interest rates rise, your home loan increases. The biggest issue that we're having is these short-term lenders are now at risk of causing credit fault. And if you cause credit fault, it affects your credit score, which then means that when you're applying for finance, it's going to be deemed as a liability. Okay, and that is effectively going to cause grief with either buying a house or refinancing. The biggest thing that we're experiencing at the moment in finance is actually debt consolidation, where clients have exposed themselves via credit cards or these short-term lenders. That itself is a massive risk, and it's never been highlighted prior to now. It's really become an issue because of the 7 consecutive interest rate rises.
I'm going to talk to you about brokers.
Sure.
Okay. What is the benefit of a young or a family or anybody going to work with a broker vis-a-vis going straight direct to the bank?
Okay, so the benefit with a broker is the fact that we have access to about 60 different lenders.
Got a plethora.
Yeah, we've got a phenomenal platform.
Yeah.
We have the capacity to understand each bank's policies, like major lenders' policies. If you go directly to a bank, they will just give you their 5 products. This is what you can have: a basic loan, a fixed rate home loan, a packaged loan, a low doc loan, or bridging finance, whatever it might be. The benefit with a broker is we have access to all those, but we also have access to that through those 60 different lenders. So it gives us the freedom to find the right deal for you. A broker works in the client's best interest. It's not about what's in it for the broker, it's in it what's going to get it across the line for the client. You know, what might suit them at ANZ may not suit them at CBA or Bendigo or Great Southern Bank. So we can find the right policy that will suit that client's individual needs.
That's what we try and encourage with our young buyers, because they also follow their mums and dads, and they, you know, mum says or dad says, you know, this is what we've got to do. So actually getting other opinions is really good in that instance. And brokers actually are available, aren't they?
Very much so.
24/7.
Unfortunately, yes. Like an agent.
But
Yes.
like us, you know, if we've got a client who's looking for help, straight away, you know.
If the phone rings, you pick it up.
That's
because
right.
If you don't, they
You're
go
not
somewhere
9 to
else.
5.
Yeah, but the thing is, like, so the biggest benefit with using a broker is just the fact that we do have that availability. It's not 9 to 5. If you need to ring us after hours, we can do that. If you need an after hours appointment, we can do that. We can do Zoom. We can do Teams. We can come to the party. If you need to talk to us on the weekend, we're available.
Especially when kids are going to auction.
Oh, fantastic.
Yeah, when they're going to auction and they really, you know, can we do this? Is this something, you know, at least I know that you've been...
But that only works if we've had the discussion prior.
Absolutely.
If it's a spur of the moment, let's go look at a house, then you may as well be bidding with your hands under your bum, because there's no point putting your hand up if you're unprepared.
No.
Again, realigning expectations is a big thing. If we can set the right guidance at the start, then it gives everyone the best chance for success. That is where, as I said before, most people come undone. They haven't set themselves up for the right outcome.
Pre-approval.
Yes.
I need to get my head around this pre-approval. Everybody says they've got pre-approval, or say to you, but you need the contract.
Pre-approval is an interesting concept because every bank has a little subclause in there that says that if circumstances change, interest rate rises affect a pre-approval. Yeah. So as long as they've got a pre-approval, then they have the best, you know, they are in a better position, okay? But the difference between a pre-approval versus a formal approval, we can't get a formal approval until you've got a contract.
The contract goes straight to the 2.
Yeah. Absolutely.
Yeah.
A pre-approval will generally last between 90 days and 180 days, depending on the lender, okay? The biggest thing, again, comes to rate rises, because just because you're assessed at when the loan is submitted for pre-approval doesn't mean that that's set and forget, you're good to go. It then gets reassessed at a later stage when you actually go to contract. So you need to make sure that you're following interest rate rises.
Just to close, Phil, could you give us just a couple of tips? Let's run through a couple of the tips that we need to really focus on when we're starting out to get ourselves and I'm going to you know, if somebody's bought a house, they've been through it before, but really for the young ones that are actually starting out and buying their first home, or anybody that's arrived in Australia and going through the process for the first time, what is it that we need to guide them with and give them some support?
Absolutely. The biggest thing is getting the information. So when we engage with a client, be it first home buyer or someone who's refinancing, we have a list of documents that we require. We need to make sure we get all that information. All that information tells a story. So yes, it's a lot, okay, but there's a reason we ask for a lot of information, is to make sure that we're not overcommitting. Budgeting is key. If you go into this with with a budget, a preset budget, and you know what you want to purchase, the price range that you want to purchase. Yeah, look, budgeting is key. When you're going down the path of setting yourself up to enter into a pre-approval, okay, or a finance contract. There's two different things. So you've got the budget of what you want to buy, and then you've got your physical budget as to what you can physically afford.
Right.
Okay. They need to align. If you don't set yourself a budget that's realistic as per your affordability, and that doesn't match up to the property that you can physically afford, then that's where you need to go back and reassess things.
Yeah. You often hear people say, "Oh, I've got a car that I haven't paid out." But I didn't realise that affected my budget.
Well, that comes down to liabilities, and that's another thing. Is one thing that we've experienced over the years that we've been dealing with mortgages is when you're going through a checklist with clients is know your liabilities. Afterpay, Zip Pay, Hum, Bumble, whatever, Honey, they're all liabilities. Car loan is a liability. Car loan, personal loan, asset finance, novated lease. These are all liabilities that sit directly under your credit score. And if we're not getting all that information, then we're coming through with an expectation that's not the right one. Because how many times it's been called out, you've been doing transfers to this account, Toyota Finance. What's that about? Oh, that's just a lease. We need to know about that.
Yeah.
So personal car loans, liabilities, plays a huge part. You'd be amazed how much a monthly commitment to a personal loan will change your affordability based on how the bank assesses. Best thing you can do is clear your liabilities and then come into this as a clean slate.
So preparation is key.
Absolutely.
Yeah. Phil, thank you so much for coming in. I hope we're going to catch up with you in a couple of months' time. We'll have a little bit of a revisit on where we're at from now to the future, and hopefully that crystal ball will be able to come into some sort of alignment.
Well, cash rate at 2.85% now as per the Reserve Bank. Let's readdress and see if it's any higher.
Thank you very much. Thanks Phil. Take care.
Thank you.